Welcome to another RES Wave update. In this video, we're looking at the 10-year bond yield, aka interest rates, and this is definitely a good guide as to what will happen moving forward with rates. And as you can see, for a long time, I've been saying that interest rates will move higher. If you look back historically through my ideas, you will see that this view has not changed. If anything, this has been one of my most solid views that I've had and will continue to have simply because of the amount of chart data that is available on this. Now, I do teach it, but there are charts out there that can show you that there is over 1,000 years worth of data for the 10-year bond yield. They join up different periods in history, different countries all together, and it makes one giant zigzag pattern, which we haven't completed yet, but it's pretty obvious that that's what it is. So in this chart, you can only see the end of C wave, which was the 1981 high, when rates hit anywhere between 15 to 20%, depending where you are. And then we had this move down, basically since then, a 40-year cycle that ended in March 2020, or actually, I think it was, yeah, March 2020, yeah. So this is quite an interesting chart for me. Like, if you look at this chart on a log scale, it gets a bit messy, but it actually just shows how crazy low interest rates went from October 2018 to March 2020. And it does not break one single rule either. It just makes the C wave of that last zigzag really, really deep, sharp. And I'll show you something when I zoom in also that's quite fascinating to me is the way that these patterns interact with this trend line on a log scale or a non-log scale, right? So that there I find really interesting. So the pattern down here, moving down since that time, is a wave D, type 2 expanded zigzag. And you could see that I've outlined every single wave, and that the C wave was the most drawn out of all of them, especially when you look at it like this. When you when you take off the log scale, things kind of even up a little more. And I think it's because of it's not really a exponential chart. So therefore, to me, I think this is probably the best way to look at this chart is not having the log scales turned on. And you can see that once we, broke the previous higher, sorry, lower high, it came back and retested that trend line at that point, which was in August this year. So now the thing about this particular pattern, right, is that being the end of a zigzag, you have to imagine that the length of the zigzag itself, it has a lot to do with basically the first A wave that occurred back when it occurred. It was like 1100, probably to 11200 AD or something like that. Might have been a bit more, like maybe like 11300 AD, and that was a very large move to the downside. And then we had the corrective portion of all that, and everything always maintained roughly around 20%, which is completely normal. It's like that moving gold in that A wave where the corrective parts of it moved down, but it never exceeded a certain point. So I find this to be very similar, where now, in order to get a C wave down, we can't just have one from current levels because it would go too negative too quickly. And basically you haven't even seen a wave E occur yet. So it just can't happen. So in order for us to basically like reload the chamber, so to speak, in terms of, how high will it go and then completely fall back down again to create the C wave, I wouldn't be surprised if it did go negative again. In fact, probably even more negative than previous. And the way that I see it is that the lower this E wave goes, the more negative it will go in the future, right? And that's simply because of the pressure that will be building up if this E wave is what I think it's going to be. So if we just move down to the daily chart now, let's go down to that area where this all started. Right now, we can turn the log scale back on here now just for the sake of inflating these waves a little so we can see them a bit clearer. So the first move up to me looks like a zigzag. Okay, you've got this knot in the middle and you've got 5 waves either side. That is indicative of a weak 5 wave move. And that explains a little bit of what's going on now. So there's a couple of ways to look at this chart, and it's a little bit interesting at the moment because it's still unfolding. But is this the start of a new trend? And I think it is. And I think that the ways that you can look at this, to me, it's starting to narrow down that it can only be looked in one way. And I have not got it labeled here correctly, so I'm going to do that now. Because if you look at this here, this does not look like a 5 wave move for a C wave. So to me, this is probably more than likely a CDE pattern that occurred down at the lows, right? And wave two ended at roughly around the lows. And then what we've seen since then is like basically a wave three. Okay, so a wave three at this point. Oops, hang on. There we go. So wave one zigzag, wave two, and then wave three zigzag. Now, could it have ended around this point? Okay, that's something that is also on my mind. Or could it be something a little bit different than that? And could this be the wave three right here? Okay, so process of elimination, you start to see that there's some kind of zigzag pattern here that to me is almost in line with what would be a wave three, and then potentially an A, B, C, D, E, and then we could basically have seen a wave four here, a wave five up here for that zigzag looking pattern that occurred there. So does that mean that we've seen a temporary top in interest rates? Well, to me, that's also very curious because of what we're hearing about the Fed pausing the large increases in basis points for the rate hikes. So at this point in time, I'm willing to think that maybe we have seen what is the first wave of this move higher, which may have started off as a weak type, like a type one weak 5 wave move, right? And that means that each wave moves up in 3 waves. Okay, so let's just take a look at the RSI, and it actually starts to make sense because you can see that the highest point in the RSI is around that top of the wave three. So it adds credence to this idea that potentially this whole move so far has been a wave one. And then we will see a pullback, excuse me, a pullback that will most likely come back down to this channel, and maybe it will become like resistance becoming support. So will that mean that we'll get a decent pullback here? It could very well mean that. And from past experience looking at waves, I can say that whenever you get this type of wave one occur, it tends to be followed by a deep retracement. Now, it's usually deep, fast, and deep. Okay. So it may push down fast, retest this channel, and then basically start to go higher again. And sometimes those um, pullbacks can be deep and sharp and fast, like I said, but then they can also skyrocket up much quicker. An example of this would be the euro in 2017 when there was that election. I think it was like a European election. It went down and then it shot right up, and that's when it started moving higher. And and that's just a very interesting thing that I've noticed that happens when these patterns unfold, and that's just a wave one. So looking back at the bigger picture, you can see that if that's the case, and I'll take off the log scale again, you know, you've only just seen a wave one here, and then more than likely what you're going to see is a retest and a wave three higher, right? And it kind of fits in line with what's happening with the US dollar at the smaller degree. Because at the smaller degree, the US dollar is actually pulling back and it's correcting a little. And then I can see that it's just going to shoot straight up. And I believe that this is going to be in line with that as it heads towards that high. And then once we get there, I do believe that we will see a turnaround in this interest rates where basically they will start cutting rates again to stimulate the market after what's going to happen is over. And I believe at that point in time will be when it's time to basically get ready to buy up cheap assets, digital assets, or any asset, because the same thing is going to happen all over again, and we're going to go back deep negative into negative interest rates. So I don't want to make this video too long, but that's what I'm seeing happening at this point. And I do believe this will go up with the US dollar, and it'll be an interesting thing to see what happens during that time. So hopefully you found this video interesting and informative. Thank you for watching.